All right, welcome back to the morning show here on Arise News. I'm Rufai Hosseini.
And I'm Adesoa Omorwan.
In a world extensively characterized by technological evolutions across every sphere of human life, social, economic, political, business, among others, it is unsurprising that these pervasive technological innovations have slowly but surely crept their way into the fintech space in Nigeria. Now, despite the threat by fintech, the compilation of banks' results from the year ending December 21st, 2018 showed that all financial institutions posted higher customer deposits. About 11 banks in the country raked in 25 trillion as customer deposits at the end of 2018. And this amount represents an increase of 16% compared to 21.5 trillion the banks quoted on the Nigerian Stock Exchange recorded as of the end of 2017. This amount is expected to rise even further as recently released first quarter results of some of the banks showed higher customer deposits due to aggressive mobilization of funds. So joining us here to discuss this and more, the managing director, the former managing director, I should say, because he just left the position, and chief executive officer of CWG PLC, James Agada. He holds a first-class degree and a master's degree in electronic engineering with specialization in digital systems from the prestigious University of Nigeria in Nsukka. Welcome to the show. And another lion is here.
Hey, thanks for joining us on the show this morning.
Thank you very much.
Fintech is one of the fastest growing sectors in the financial space. I mean, the future of banking, they say, is fintech. But has Nigeria come to accept fintech? Has it come to stay? How would you describe the spectrum in Nigeria?
Let's say it's come to stay in Nigeria first, but then there's a very wide spectrum of what comes under fintech. I think today payments in Nigeria are probably dominated by fintechs. Probably, I'll say probably. Because it's not definitely. But in other areas, we're still having tentative steps because apart from payments, you have the area of credit, lending, investment, savings, you have insurance, you have wealth management, and others. So there's still a wide gap. Part of it also is that there are certain things you can't offer strictly off technology base. So there are not many people in Nigeria that you tell them that you're going to manage their 100 million asset base over a phone and they will agree. So
The issue of trust.
there's the issue of trust. Issue of trust in Nigeria is big. I think somebody once said that trust is the biggest cost of business in Nigeria.
All right. Another thing that just comes to mind when it comes to fintech and how broad the industry is access. We all know for this to thrive as a need for internet penetration, and we've seen how this has grown over the years from about less than 10% a couple of years back, about 10 years back, to over 20, 30% that it is now. And it keeps growing in this country. And that's also impinges on fintech. So internet access is one. But Nigeria has been able to find a sweet spot to crack it up, and that's the USSD. Has that been, what has been the success story as regards to that? Because for payment solutions and things like that, everybody uses USSD. If probably for our listeners out there, also if you can expatiate more what the USSD technology is all about, and we come back and we talk about those things.
In simple terms, the USSD is a signaling protocol that is part of the GSM specification that allows you to send plain text messages that are delivered to particular service endpoints. And because it works with the regular GSM, it doesn't need 2G, it doesn't need anything. So wherever there's a GSM service, there's a USSD service. So you get to the point where you send a special code, and that special code gets transmitted using the USSD protocol. So in simple terms, that's what it does. In terms of availability, everywhere that there's a GSM phone, there's a GSM signal, you have USSD. And also, every GSM phone supports USSD. You don't need an app. The same way you send your regular messages, the same way you can send a message on it. It's cheaper in a sense than SMS, but because basically they do the same thing, because wherever there is GSM, you can send SMS. What it can't do, of course, is that it's not very interactive.
Okay.
So you send a message and you might get a list of options and you choose an option, or you might be asked to enter a response and you enter a response. So it's pretty basic. There will be no pictures. There will be nothing engaging. It's just that. It could as well be just like sending an SMS message. But what it does have is the amount of reach that you can achieve. So if there's 110 million phone users in Nigeria, you have 110 million USSD users. If the whole of Nigeria is covered by GSM signals, you can use USSD from everywhere. Some people think that is the future. I think that is not true. I think that is like the past. It is a crutch, it's a fallback for you to use when there is no signal. You don't utilize any of the intelligence that is available on your phone itself. Everything is done at the back end. And there are actually also security issues around it, because the things you're sending them in plain text. You really have to believe in the ability of the telephone companies to secure that channel, because in the GSM specification, it's actually not secured. So USSD is good. It allows everybody with whatever phone.
Most of the transactions today in Nigeria, if you look at the list when NIPS brings out the report, are mostly USSD based.
Yeah. In terms of number, in terms of volume, probably isn't. Because why I say in terms of number is because everybody can use USSD. Every phone can do USSD. That's why I'm saying the reach and the access. So it's easy to know why it should be the probably more used now. But if I ask you when was the last time you used USSD to make a transaction, what would we answer?
This morning, to buy a recharge card.
When you look at this payment spectrum, when it comes to fintech, Kenya is a shining example on the continent. I mean, look at the example of M-Pesa that has come to stay. It's easy, it is accessible, up to the newspaper vendor on the streets. And then you look at the macro dynamics of fintech. You talk about huge population, Nigeria has it. You talk about mobile access, Nigeria has it. When you tick all those boxes, Nigeria ticks for it. But fintech in Nigeria, like you have said, one of the issues here is issue of trust. But isn't there another issue of oversaturation in the urban areas? Because when you look at the difference, I mean, one of the driving forces for fintech should be the underbanked and the unbanked. But we don't seem to be looking at that. Are we having that conversation when you go to the rural areas? They're not so, saturated areas. Are we employing fintech there? Isn't that an issue?
Okay, now you've created so many. First, I'll tell you, if it comes to using digital channels, electronic channels to access access financial services, Nigeria is actually doing pretty well, if you ask me. And then people forget some of the volume and the scale that you're talking about. So while you're talking about M-Pesa and all that, there are probably 35 million account holders in Nigeria. How many people are in Kenya altogether? Yeah? And if you have an account in Nigeria, believe me, you can receive money through USSD. You can send to anybody you want, to any bank, cross any channel. In fact, not only to any bank, to any mobile operator, to any microfinance bank. So that's just to see the kind of depth that you actually do have in Nigeria. In terms of whether the fintechs are to focus on the unbanked. Now, that's a totally different issue. I don't think the fintechs set out, or anybody set out a fintech to focus on the unbanked. If you do look at most of the fintechs you have in Nigeria, their first requirement is that you have a bank account. They don't provide you with a bank account. You have to have a bank account. What they do is that they allow, they deepen the financial inclusion by making it really easier for the Okada man to, and because everybody buys airtime, it ends up coming there. So I don't see the very few fintechs that are actually focused on bringing the those who are not in the financial system on board. There are a few of them in the mobile money space, people like Paga, a few of them in the agency banking space, people like Innovatives, who are focused on that. For the rural areas, major requirement there is agency, because you have to take that money from somewhere and get it into the system, no matter what it is. So if you look at Kenya, for instance, they tell you they have, 120, 130,000 agents. I used to have this discussion with them, and I say, you have 130,000 agents. What are the agents doing? I mean, you are supposed to be fully online and mobile, and so why do you need those agents? Then you realize that you need the agents because there's the money that is outside that has to get into the wallet before people are going to be able to transact it, because it's not everybody and it's not every transaction that possibly can pass through. So what we miss in the rural areas right now is that we don't have the agents. We don't have enough agents.
I just want to come in here and ask this question. I mean, you've talked a lot about agents, and you've talked about money, mobile money operators and things like that. Another question that comes to my mind is, let's talk a lot about regulatory framework. You'll agree with me that we've not had a solid conversation as regards fintech regulatory in this country as we speak. Most of it's still regulated by the CBN and NIBS. And for those that want to come into the business sector of fintech, there's a very high barrier. In fact, I think the least that you can do is well over 100 billion naira. I think it's even been up to about 1 billion. So the likes of the Flutter Waves and the other people that want to come in pay, slightly close to that price or above that. Do you think that if we can, decentralize sort of the power of NIBS and CBN on this, it will accelerate the growth and development of fintech in Nigeria?
My answer would be probably. Right.
So that's a probably you have.
Yeah, it's probably. Because from NIBS' point of view, I think NIBS is a single point of failure. And I think we've had these discussions with them.
Single point of failure?
Yes.
How? Why?
Because many transactions are forced to go through NIBS. And therefore, in cases when something happens to NIBS, the entire system is actually down. So as of today, every POS transaction has to go through NIBS. That doesn't make sense, in my opinion. They have reliable systems. They're spending to make it very reliable. But, anything that is made by human hands will one day have an issue. Yeah. So I think that model doesn't work. It needs to be decentralized. In terms of CBN, because I've also engaged with CBN severally trying to get licenses for CWG and all that, they have an issue with trust. So they don't want small companies that will come in, start something, and then run out of gas in the middle of it, and then everybody loses trust in the whole system. And in Nigeria, when people lose trust, it spreads very quickly. If a bank fails in Nigeria, every bank gets affected, not just the bank that failed, every other bank, because everybody say, hey, wait a minute, my money is not safe here, it's not safe here. And then people they'll be run on all the banks rather than on just one bank. So in my engagement with CBN, that is their primary concern. So how then does a small startup be able to get into this mix? How do you earn the trust that you are not going to cause the entire system to collapse? It's a hard discussion. And for me, I mean, there was a point where we were going to do something in CWG, and we were told we have the license. And then 2 weeks later, we got a letter saying I need to put down 1 billion. And I was like, I don't understand what you mean by put down 1 billion. I mean, I have to take cash, 1 billion, and come to the CBN and put. And they said, yes. You have to keep it there for 6 months for you to get this license and then operate, which I thought was extremely burdensome. But on the other leg of it, you find that depending on what you're doing as a fintech, there's actually a wide array of possible licenses that you can get in Nigeria that you can then ride on to do whatever you want to do. Mm-hmm. And those requirements are not as high. If you had a microfinance bank license, you could do anything you want. It doesn't require 1 billion. And I found out a few days ago that if you're doing lending, you could actually get a money lender license. Mm. And in some places in Nigeria, money lender license is 5,000 naira, and it's issued by the local government. So sometimes it's for whoever is the person who wants to get in to sit down and look at the whole spectrum and decide where you want to play. And for some of the areas, you really won't be able to get away without providing that security. So if today I wanted to put up a switch, and you put up a switch, and it's going to carry a lot of people's payment information and process a lot of transactions, what CBN is asking you for is like a security deposit. You'll have to put that.
So
can the NDIC cover that?
Now, okay, so these are the areas where we've made suggestions to CBN at some point. Does it have to be cash? Could it be a bond?
Yeah.
There could be other means. Those are the areas where I think the CBN needs to be a bit more flexible.
So we do agree that the way we are saving, paying, and borrowing is changing. But to sustain this, there's the conversation around skill sets. We've seen reports, in recent times saying that the skill set needed for fintech is quite low in Nigeria. Are we building the right skill sets to sustain whatever momentum we seem to be growing now? You say, it's okay, it's comfortable compared to a country like Kenya, but do we have the skill sets to sustain this, project into the future?
There's the two skill sets that you need, two broad categories. You need the fin, and you need the tech. Right? So you have to understand that you need both of them. Now, the fin skill set is about domain knowledge. It's about understanding how the financial thing works, understanding the economics of it, understanding the interaction, because you're going to design the product. And I think we have quite a lot of that. You have a lot of banks, you have people in trade, you even have people who are doing it traditionally without any training. You have people who are doing, daily contributions. You have people who are doing money lender business. So do you already understand what is the financial things and how do you do it? For more sophisticated and more complex things, if you decided to start doing derivatives and you start to do forwards, and if you start to do more complex things, then obviously you need more expertise in that area. In terms of the technology side, if I tell you we don't have the skills, I'll be lying. If I tell you that we have the skills, I'll also be lying.
So what is the truth?
Now, the truth is that in all these things, the technology that is required are almost 90% software. And my experience in Nigeria is that the thing that stops you from building the software in Nigeria is just your ability to challenge people and give them the time to do it. If you did that, you could build whatever software you wanted in Nigeria. Let's not forget that at one point, if I remember correctly, the first banking application to run on the Oracle database was built in Nigeria.
Yeah.
Let's also forget that the first software that enabled images to be stored in an Oracle database was built in Nigeria. Yeah. I'm not talking about last year, 2 years ago.
The 90s.
I'm talking about well over 20, 30 years ago.
Yeah.
Right? And over time, you've had more people with more skills. You have people who have gone out, come back. You have people who are local and doing other things. Yes, in some areas you might not have experience in particular areas, but these are things that you could buy if you wanted. You could train. You could do lots of things. My own experience when running CWG and serving as CTO for so many years is that I usually get what I want just by challenging kids.
Okay, let me get this out of you because I need to get your take on this. Blockchain technology. I know it's a conversation everybody in the fintech space does not want to have in Nigeria, but that's the future. We've seen the amazing impact of blockchain. I mean, I was reading a report recently where blockchain technology was being used to help people repose their property rights. And across board, in terms of fintech, in terms of transactions, a lot of people, will always toot their horn for the safety, the security, the flexibility behind blockchain. And while we're talking in this conversation, we're saying, okay, maybe we should decentralize NIPS or something. That's just an idea in the air. Can blockchain be that panacea to decentralizing NIPS? And then what's the future of blockchain in all of this?
Blockchains are good. I mean, the basics for blockchain was established maybe, 30, 35 years ago?
Yeah.
So actually it's not that new for people who have been in the field. My personal thinking is that blockchain is oversold, especially when people don't dig in to see what the limitations are. So when you dig in, for instance, and you look at something like Bitcoin and you look at it and you discover that you can't do more than 7 transactions a second, you start realizing that some things are not possible. You're not going to run your national switch on 7 transactions a second. Yeah, maybe you can do the bulk transfers between CBN and the banks at that, because anyway, it's never up to that volume. But you're not going to use it for that. And then in some cases, people think that, okay, how do they say it? The carpenter that has a hammer, every problem looks like a nail. So is it appropriate for the thing you want to apply it for? Or are you thinking to go with the hype or go with what will attract VC money? So if you did your property rights electronically, I mean, that anybody could do or that could be done, what exactly does the blockchain add to it? People will tell you, okay, it's because now everybody has a record of the transaction and nobody can fake it. Truth is, it can be faked. Blockchains
still on blockchain?
Yep. You
can be cracked?
Yep. You go and check. Blockchains are being attacked. The blockchain itself, not some exchange or some repository and all that. It's been. So when you understand that, you know that, okay, first thing you need to realize that, wait a minute, this is software. And once something is software, and technically, nobody can prove that it is 100% secure, no matter what the protocol is. So blockchain for me is one of those tools that people will apply. Is it the future? I don't know beyond tomorrow what the future is. It's a bit, but it's one of those things that will come in, and there's a lot of research going on to make it more suitable for the kind of things you are talking about. But has that day arrived? I don't think so.
I'm talking about fintech startups or entrepreneurs. We've talked about investment. Briefly, you talked about it. Some would say shortage of venture capital is a problem. We've talked about skill set. But what are some of the other challenges they face in an emerging economy such as Nigeria?
Well, we've looked at trust, because what you need is adoption. And so if that trust is a big issue, you are going to be slowed. Second is identity,
Okay.
right? And when people say identity, a lot of people think that identity is just by issuing you an identity number. I mean, today anybody can go and get an identity number from the Nigerian government, but it doesn't tell you much. It doesn't tell you, for instance, can I trust this guy? It basically tells you nothing about him. It just says he is physically who he claims to be. But who does he claim to be? Is he a crook? Did he just come out of prison? Does he have... You understand what I'm saying? So that identity is fine, but that identity has to be linked to all the other things so that you could have a profile of the person you are dealing with. The same way you could have that profile for the companies you are dealing with. So I think trust is a big issue, having identity and having it linked up. Because if you have that identity, you have it linked up, it becomes a lot easier for people to do what they're doing now as fintechs. I think VC funds is a big problem because people need to be funded. If you have too much VC fund available, it's also a problem because you now have toy projects being funded. You have businesses that don't have any reason to exist being funded because you have a lot of money. So, but I think trust, identity, and linking it all together is a big drag.
Well, on that note, we'd like to say thank you very much for coming on the morning show this morning.
Okay. Thank you very much.
Time to go?
Yeah, that's good.
Great. And that brings us to the end of the morning show today. Many thanks to you for watching. From our entire team here in Lagos, enjoy the rest of your morning and, of course, the rest of your day. Goodbye.